Hey, what it do, what it be? This is yours truly, another episode of Talks with the Tax Cop. I believe I got it right this time. We are on episode 9 of season 2. And I am none other than your host, yours truly, Patrice L. Berry, EA, aka the Tax Cop. So I'm glad to have you here. Last week we talked about what happens when you don't pay on when you do your tax return and you owe them some monies, right? And you got to figure out, because you don't have all the money in it at that time, what are your repayment options, right? So what are your resolution options when we have a situation where we don't have the money, but you got to pay them people the money anyway? All right. So in this week's episode, I want to talk twofold. I really want to take you all through the tax return at a really, really high level. Like I've talked about adjusted gross income. I told you I was going to talk about each number, what it stands for, how it's made, what it does, what it lives for, that type of thing. But I kind of want to show you, I'm going to show you the 2020. Y'all, anybody who's watching the video, I'm messing with my hair because it's just driving me crazy. But I really want to take the time to show you the return itself. My clients that work with me actually get to see the actual return. Like I break this thing down with their numbers, line by line by line, and then all the supporting schedules so they can understand. So I kind of want to go through at a really high level before we get into what I said I was going to talk about this week. We're going to break down the resolution options, the payment plan options. We're going to talk about nothing but payment plans today. But before we get into payment plans, I want you to know there's 4 critical areas I feel like you should be paying attention to on your tax return. And if you're not familiar with those 4 critical areas, it'll throw you, right? So I want to kind of give it to you quick and dirty, so then when I start talking about payment plans and why we are doing these payment plans, you'll be like, "Oh, that's because number 4 is what it is. Number 4 is the number she talking about, and if it say this versus this, then these are the options I have." And I want to give it in total context. So anyone who is actually, like, if you're just listening, go and pull your tax return. If you're not looking at the video on YouTube, that's cool. I get it, right? It's a podcast. And sometimes it's just, I want to catch what she's saying and really think about it. And then I can go take my notes. So this is one of those ones I would encourage you to go back, pull the tax return, and actually look at these, because I'm going to talk line numbers, okay? Go look at these areas on your tax return, page 1 and 2 of your 1040, and kind of decipher and break that thing down so that you can absorb it. And that way, when you're talking to your tax professional, or you're actually doing your tax return yourself on any other software that you're doing, that you'll be like, "Oh, these are the 4 critical numbers that she told me to take care of." All right. So let's jump into the tax return before we go into a full-fledged discussion about payment plans. Now, I tell everyone that taxes really are addition, subtraction, multiplication, and division. I'm going to say it again. Taxes are just addition, subtraction, multiplication, and division. It's about where the information resides on a tax return. Okay? It is basic math. Y'all will hear me say this over and over again. It's not calculus. How do I know? I done had to take calculus twice. All right? It's not statistics. I done took statistics in undergrad. I done took statistics at my old job. I done took statistics in my master's class. Okay? It ain't statistics, right? It is truly basic math that if y'all understand, we just add and subtracting, and there's key numbers that I have to pay attention to on a tax return. It'll make most sense, and you won't necessarily feel as overwhelmed with these things. That, at least that's my hope, that you won't feel as overwhelmed with these things that be happening in your life. All right, so let's go, and I'm going to share my screen. I'm ready today. All right, so let's see if we can make this a little, do I make it a little bit bigger? Come on, I'll make it bigger on the screen. There we go. I'm getting the hang of this, y'all. Yeah, don't pay no attention to you, girl. All right, so all these mouses and screens I got. All right, so I'm wearing glasses, so we making this for my eyes. All right, so this is your 1040. the four numbers I really want you to pay attention to. Yeah, we got W-2s and all this kind of stuff, but critical numbers that are making decisions and driving stuff on a tax return are on your 2022 tax return, line 11, adjusted gross income. Y'all, I call her the queen of the tax return. I call line 11, adjusted gross income, I call her the queen of the tax return because she show up and do whatever she want to do. She is your phase out determiner. She end up where she supposed to end up. She the start of most people's state tax returns. Not everybody's state tax return. Most state tax returns. She is determining whether you can do certain stuff or not. We using her and we modifying her to determine if you get certain deductions later on, right? Depending on what's going on in your life. If you're doing passive income, if you got a traditional IRA, like she just driving so much. I call her the queen of the tax return. And the reason why I call her the queen of the tax return is because y'all out here playing games like the man trying to get you. Okay? And I'm not saying taxes are fair. I'm saying it's a game and you got to play chess. And so just like chess is very strategic, taxes are strategic. You cannot come to your tax preparer or be doing your tax preparation and decide at that time that we coming up with planning strategies. You just can't. It's too late. In most cases, if you didn't capture it somewhere else, it's hard for us to be trying to create it. Okay. You need to have a conversation with somebody before we get to that point. So this is the reason why I'm showing it like mid in the summertime, because some of y'all are going to extensions, and then when you see it, you like, this is what happened when I did my extension. But then some of you all are in the point where you are planning for what's going to happen on the back half of this year so that your 2023 tax returns don't look like this. Now, I cannot promise you that it will be line 11 on next year's tax return. I ain't going to tell you no stories. The IRS, they have to put some stank on it every year and do something different to these forms every year to make it look a little bit different. Otherwise, I don't know. Anybody who's in that department maybe ain't going to have no job. I can't tell you, okay? But they're going to make some adjustments. But for y'all looking at this screen, y'all, I be trying to put it over here. I got to get that to not come on. I got to talk to somebody, figure that out. Anybody who watching the video, like, why is that coming up? Anywho, all right. So 11, line 11 for 2022, that's what it is. All right. It is adjusted gross income. I call her the queen. I feel like she is the most important number on the tax return. Now, you might talk to somebody else and they're going to tell you something else is an important number. But I'm going to tell you, Patrice L. Berry, aka the Tax Cop, she feel like that's the most important number on the tax return. Why? Because everything beneath her is driven from her. And because she carries so much weight and she come in a room like queens do, and she just move her cape and let you know she in the building, she drives so much, and she the start of your state tax return. I just feel like she's the most important number. We want to do whatever we can to legally get her as low as possible. Y'all, this is the spiel I give my clients. I want you to know that that's the number I'm looking at to be like, what can we do to make her legally as low as possible? Now, y'all going to ask me a bunch of questions. That's going to be for another episode. But what do I do to get her legally low? That's a whole nother podcast. That's not what we're talking about today. All right. So then the second most important number on the tax return is for 2022 is line 15, taxable income. I call him the king or the king, depending on who I'm talking to. Just where you from, okay? It's just ain't nothing fancy. It's just where you from. The reason why I call him the king is because he is the one who is decreeing and declaring what is happening. He telling everybody else how they gonna move from here on out. Now, he gave the queen permission to move all over the chessboard. All right? She can move like all the other pieces. But the king tell the pawns how many pieces they can move. He tell the bishop and the knight and the rook what they got to do to protect him and the queen, right? So I call him the king, right? Taxable income, the second most important number, because in my tax imagination, I believe they have a conversation for each tax client that they doing. Okay, so each of my clients, I always tell them, I feel like they had this conversation. The conversation went a little bit like this. The king go to the queen and he be like, baby, don't ask me why the king sound like a smooth pimp. I used to read a lot of Iceberg Slim back in the day. Baby, I don't want such and such to pay this much in tax. They done worked hard all year. They done made money. They got some children. This is happening. I think we could cut them a little bit of bread. And then the queen say, cool. Uh, you know, I don't mind you doing what you got to do and hook people up. However, baby, I need you to understand that everything gonna start with me. Like, I am the ceiling, but you the flow. Not because I disrespect you or anything like that, but I want you to know that the number they're gonna start with to determine whether or not their taxable income is low as can be possible, they're gonna have to come and I'm gonna be the line, adjusted gross income, line 11. I'm gonna be the line, and then you do whatever you do in between that, and then you can tell the people what they want to hear so that they happy that they're not paying tax on my number. That's cool. That's cool beans. But babe, go and do what you do. Tell the people what you tell them. Understand when it comes to their state tax return though, they like I'm gonna be front and center. I need the people to see my outfit. And the king said, baby, I ain't got no problem with that. As long as it keep you happy and everybody moving and they understand. But over here on the federal side, it ain't gotta be that hard. And she said, cool, just as long as you know where you starting at. That's the conversation I believe they have. Now, you can think whatever conversation they have, you can talk to your tax professional. Maybe they think it's different. But in my mind, this is how the conversation go. So, second number that I feel is the most important on the tax return, taxable income. Line 15 for 2022 return. So we got a queen, we got a king. Now, don't nobody kill me. All right? I'm married with children. I got a husband. I do tell people, I believe every good king deserves a good queen, and every good queen deserves a good king. They got to work in tandem. All in all, I want you to understand this is strategic. This is strategy. I need them to work together because it impacts things down below. All right? Now, that is what's happening. That's the first two numbers. Remember, I told you line 11, adjusted gross income, aka the queen. Number two important number, taxable income, aka the king. So once you know what the king and queen are, the queen and king are, you know what's gonna make moves. You are only paying tax on the king. So line 15 is the only amount that you're paying tax on. Unless you have some additional tax, if you got some self-employment tax which is gonna show up, you really only paying tax on the king. So you gotta know that. And you gotta know what that number is when you go to the tax tables. Going to the tax tables is a whole nother podcast for a whole nother day. Y'all, I got content. All right, so let's go into it. The third most important number on the tax return that y'all gonna be giving people heartburn over is on the 2022 tax return is line 24. It is your total tax. This is the tax liability that you owe these people for the year. What? Y'all hear it? Well, why I gotta owe the people tax? This is the amount of tax off of the taxable income. This is the amount that you on the hook for. You gotta know what that number is. Now, there are some credits, there's some refundable credits, there's some things that happen, there's some self-employment tax sometimes they get added on, you got some net investment income tax, you got some foreign income tax credit, like you got a whole bunch of stuff that happened in this one small section, but at the end of the day, we got line 11, line 15, and line 24 on your 2022 tax return you got to pay attention to. The line 24 is what you're on the hook for tax for. Got it? Now, that's three. Remember I told you I'm only giving you four numbers and then we go into payment plans. One is the queen, adjusted gross income. Two is the king, taxable income. Three is total tax. That's what you owe the peoples. That's the tax liability. What you owe them peoples. That's what you owe. Okay? Then the fourth number that you got to pay attention to is line 33. That's your total payments that you did throughout the year. Now, you can make estimated tax payments. You can have money withheld from your check. You can have some refundable credits. You can have an earned income credit. You can have American Opportunity Credit. Y'all saw this here. This is when we were doing calculations and we were getting advanced child tax credit and we were getting a recovery rebate. All that was happening here in the payment section. Okay, so line 33 is that fourth important number. The reason why is because I'm gonna show you math. All right, so we got line 1. We did some subtraction and stuff like that to get to, line 11, the queen. We did some subtraction and things to get to number 2, which is taxable income. Okay, that's the king. Then from there, we actually go to the tax tables, and or in some cases, we got to do some additional math. We got to do some add, subtraction, multiplication to come up with what you owe for tax liability, what the information that you owe these people. That's line 24. And then we do some calculation to compare, because all we doing is comparing. This is what you owe. What did you already pay in the last year? Y'all heard me? What you owe them people is line 24. Line 33 is what you paid in the last year. It also includes any amounts you paid for when you filed your extension. If you made a payment when you filed an extension saying, hey, it's and you ain't filed your tax return yet, that amount gonna get captured in the payment section. So we got estimated taxes, stuff that was withheld throughout the year, refundable credits, any payments you made when you filed your extension, all those kind of payment, right? Some credits. All of that's going to line 3 to give you total payments. The 4 numbers I told you about: adjusted gross income, queen, taxable income, king, um, tax liability, total tax you owe them people, 24, line 24, line 33, what you actually already paid them. Now pay attention to what happens. If line 23 is less than line 33, like line 24 is less than line 33, if what you owe them is less than what you paid, what you owe them is less than what you paid. You paid them more than what you owe. You get a refund. It's that simple. It is that simple. That's why I need you to pay attention to 4 numbers. If line 33 is more than line 24, right? You pay them people more than what you owe, you get a refund. Why? Because you overpaid them. However, if line 24, what you owe them people is higher than line 33, that means you ain't paid them people enough money during the year. It's that simplistic. That means you got a balance due. Right? Let's go back. If line 24 is less than or smaller than line 33, line 33 bigger, you get a refund. You're going to see that show up on line 34. That means you paid too much through the year. But if line 24 is higher than line 33, right, that means you owe them people some money. We just doing math. You owe them people money because you ain't paid them enough, and you got to pay that balance. You got a balance due. That's gonna show up in the line 37. That's it, high level. That's what it is. Now, if you got a number in the amount you owe section, line 37, and some underpayment penalties on line 38, line 37. If you got a number on line 37 for 2022, it could be a totally different number here on out. You owe them people some money. And so therefore, you have some options depending on what is going on. First and foremost, we got to get you in compliance. And when I say we got to get you in compliance, what that means is, right? What that truly means is when we're talking about get you in compliance, you need to pay the current year's tax. Like you have to have filed the current year's tax and 6 years back. We got to get you compliant. The current year's tax is 6 years, because then we can go to the table and start negotiating options. Right? Regardless, you owe the money. But we need to, like, you can't even really go into a full-fledged installment agreement the way you need to until you go do what you're supposed to do. Let me show you my face so y'all can see how serious I am on this. All right? In reality, you cannot be playing with these people like that. You can't, because they know it. Like, it's going to continue to go and grow and grow and grow. But before you can even negotiate, it's like going to the creditor and be like, all right, okay, like, am I current? Can I, you know what I'm saying? Y'all trying to do all this and get offering, everybody want to offer in confidence. Like, you want somebody to be like Oprah. Like, the IRS ain't Oprah. Now, you not getting an offer in compromise. You getting an offer in compromise, and you getting it's not happening that way. But they will let you get them on a payment plan. We could go back to layaway days. Uh, do y'all know what layaway is? Hopefully, those who listening to me know what layaway. I don't like. I ain't that old. I'm old. They don't do layaway like that now. But it's a layaway. It's a layaway situation. Okay, so we on layaway terms when we talking about payment plans. And if remember, I told you line 24, line 33. If you got a number on line 37, you owe them people some money, and they want their money. And so therefore, you wanna roll any balances owed into a night type package because you may owe 5,000 for 2022 and 7,000 for 2021. Like you want it all consolidated so we can actually make your money work for you because you don't want to be in a payment plan for this. And the beauty behind it is the IRS did allow like balances to be rolled in, and you can go into a new installment agreement, and we can figure out what works for you, right? Because they gonna tack on interest and penalties until the amount paid in full. It is what it is. So let's jump over. I'm looking at my time because I don't want to bore y'all to death. Let's go in depth because I told you I would go in depth into these remedies. Okay, last week, and I gave you the sustenance or the foundation of where these numbers are coming from, so you can go back and look at your tax returns and look at those sections. 4 critical numbers: the queen, right, adjusted gross income; the king, taxable income; uh, total tax liability, what you owe them people; and then number 4, payments, the payments you made throughout that year. Okay, and then we need 1 and 2 to help us determine 3, right? Because they all lead into each other. They interact with each other, right? And then all we're doing is comparing number 3 to number 4. If it's bigger, then if 3 is bigger than 4, if 3 is smaller than 4, right? If your liability is less than what you paid, you get a refund, right? So 3 is smaller than 4, 4 is bigger. If 3 is bigger than 4, you owe them people some money. Okay? If your liability is larger than the payments you made, if that's really all that's happening, you have not been making enough payments throughout the year based on what your taxable income is, number 2, what it was. So therefore, you got to be paying attention to that. You got to pay attention to what your taxable income number is. But you got to know all the stuff they can do to get AGI low so that we can get taxable income as low as legally possible. That's the strategy, right? So this is what we're talking about when everybody on the internet's talking about something. But I need write-offs. I need it's not write-offs, it's deductions. What can I legally deduct in a tax code that's going to help me reduce my taxable income, which therefore will help me reduce my tax liability, and I can compare and make sure that that's what I pay throughout the year. Like all jokes and games aside, I really want us to understand this so that we're not mad. Like you gotta pay taxes, but I want you to understand what you're paying and how you ended up in a situation so you know how to maneuver in this space. It really is. I got a heart for the people, and I absolutely love tax and the tax code. I really do. I ain't gonna tell you if I think it's fair or not. I'm not. Like, but I know who the rules are made for. I know it's made. The tax code is made for investors and business owners. That's who got the influence to be lobbying to make stuff change. Okay. Now, when you find yourself in a situation like my back is against the wall, stuff happens. I get it. Life happens. I've already told y'all. I'm not gonna tell you I've never had to stroke a check to the IRS. I told y'all. Anybody who's been listening to this podcast, and those of you who are new, I've had to stroke 2 5-figure checks in my adult lifetime to the IRS. It don't feel good to stroke a check. I'm gonna say it again. It don't feel good to stroke a check. It just don't. But the truth of the matter was, my taxable liability was higher than the payments I had made throughout the year for various reasons. Some things I just didn't play the game right. Some of it I didn't watch, and I'm a tax professional. And I'm an accountant, but like this is what I do and have been doing for 20 plus years and just didn't pay attention to it. I do my best to do, like I do my own tax planning now. And I'm not gonna tell you I didn't do tax planning at the time. I had a lot of things going on. At the time, the two times, well, one of them I knew I was gonna have to stroke a check. I knew it upright. I told y'all it was an investment situation. So that second check, I knew, but I was geared towards it, and I had the money. I had the money earmarked. I was trying to do some stuff. I didn't do everything the way I needed to in the code. 1031 exchange. I didn't do we didn't do timing. The panini hit. Stuff got crazy. I knew I was gonna have to I knew it. I was like, oh, we're gonna have to pay for this. And I set the money aside from the capital gain, excuse me. So I knew that one. The first time I got caught slipping. I was out here running a couple businesses, working a W-2 job. My husband just got me because on his, I had been planning off my stuff and not looking at his stuff. And my husband's an entrepreneur. And when I looked at his, I was like, dang it. I should have switched your entity. If I switched your entity, we could have played this game a little bit different. The entity has been since switched. That's a whole nother discussion for another day. But had I been watching it closer, because I was only watching half of it, half of our household stuff, and we filed jointly. I'll be transparent. That thing got me, and I was like, and he was like, babe, he got on me. He's like, Patrice, I told you to watch all of it. I was like, you did. You right. You the husband. You right. You was right. Y'all go look at some of my first episodes. You'll see my husband. You the husband. I love you. I did not listen. I was out in these streets doing too much and not paying attention. I will never put myself in a situation like that again. I will know in advance if it looked like a 5-figure, it won't happen again. It only take twice. Fool me once, fool me twice. The third time you was just a darn fool. I am not a fool like that. But I also know how this works. And I'm also actively, heavily into I thought I was doing tax planning before. I'm heavy in that joint now. Okay? All right, so let's switch the screen. I done gave y'all my spiel. I said I'm gonna keep y'all all day, all night, all mornings. Let's look at it. All right, what's a payment plan? All right, you owe, right? You owe some money. Line 37 got a number in it. Let's talk about what's a payment plan. This is the IRS website. Y'all know, former auditor. I go to the freaking source. I don't play no games with y'all. I don't play no games with y'all because I don't want nobody playing no games with me. I want you to know this is where I got it from. The IRS website, if you know what you're doing, is very resourceful. And if you don't, find you a professional who do and who know how to read the IRM, that's Internal Revenue Manual, and some other things out here to best protect you. All right, so here we go. What's a payment plan? It's an agreement with the IRS to pay taxes you owe within an extended time frame. You should request a payment plan if you believe you will be able to pay your taxes in full within an extended time frame. Now, let me tell y'all something. Y'all see that? In full within the extended time frame. For those of y'all who do not realize, they got 10 years to come and collect. 10 years to come and collect that payment. Meaning you could have up to 10 years of interest on that number. So something that was like $2,000 could balloon up into something absolutely ridiculous if you let it fester. It's like credit cards, right? We do something, we do it, and then you look back and was like, dang, it cost me this much when I that $100 meal ended up costing me this much because I didn't pay my balance. It's the same concept. And that's an ouch statement for me because there's some stuff on my credit cards I got to pay down. Okay? If you qualify for a short-term payment plan, you will not be liable for a user fee. So this is on a FAQ page, okay? Not paying your taxes when they are due may cause the filing of a notice of federal tax lien and or an IRS levy action. We can talk about IRS levies, tax liens, all this kind of stuff. We'll talk about that later. And then let's do an episode about the IRS collection process. I love this because I really do want to educate you all. So we'll do an episode about, once we go through the different remedies, we'll go through and talk about what the IRS collection process is. So y'all truly can be like, oh, this is really how it works. There's a series of letters. There's a series of things that happen. I truly want y'all to understand how things move. Okay? What happens when you request a payment plan? When you request a payment plan, or an installment agreement. Um, with certain exceptions, the IRS is generally, that don't mean they ain't gonna try it, okay? Generally prohibited from levying, and the IRS time to collect is suspended or prolonged while an installment agreement is pending. Now, when y'all talk about what an installment agreement is pending, well, there are times when an installment agreement is pending because the dollar amount got to be approved by a supervisor because it's rather high, like it's over 50,000, 100,000. I got some people that I've worked with where we had to wait. We had to get approval. We sent everything, and then the manager had to approve the payment plan because it was high six figures. Because they got to look at the amounts and they got to look at your financial statement. Like, you got to tell them their business, okay? An IA or installment agreement request is often pending until it can be reviewed. I'm telling y'all, no lies, right? And that's usually by a supervisor. And an IA is established, or the request is withdrawn or rejected. And if it's withdrawn or rejected, they got to come back and tell you why they're withdrawing it or rejecting it. Because essentially, this is the terms, right? When you go into an installment agreement, this is why the time to collect is suspended or prohibited from levying. You are going into agreement saying if you're going to pay a certain dollar amount, it's going to pay it in full by XYZ date, right? Normally they do it, and the truth of the matter is they're trying to collect everything in full and put you in an amount within 72 months, right? They're trying to have all that paid off. In most of the cases I've dealt with, that's 6 years, right? It used to be like 5. They try to do it in a 5 window. But and a lot of times within 7, or that I've seen since the panini, right? They trying to make sure it's paid in full. Because they know that if you don't pay it in full in 10 years, they gotta let you off the hook. That don't mean leverage it as a strategy. That's not a strategy to do, unless, there's other things we can do. But if you owe them the money, this is why I wanted you to see the tax return first and understand where it's coming from. If you did not, let's stop saying they got you. If you did not make enough payments throughout the tax year in question, and your tax liability is what shows up on a tax return, and you ain't making enough payments, and you got a number in box 37, you owe that money. You rightfully, that's a debt you owe. And we got to change our mindset, because what that means 9 times out of 10, especially if you're a W-2, that means you didn't withhold enough money throughout the year. Or your side hustle worked that well that you was like, man, I'm keeping this money. I don't want to pay them nothing on that hustle. And they're like, hey, this is not how this game works. You made the money. You owe me a portion of it. Now, I'm not going to take all of it, but you rightfully, because you live in the United States of America, this is how we play this game, and I want you to go ahead and give me my spread. I ain't making the rules. I'm just telling you how it goes. And a lot of times we get upset and frustrated and being like, how they gonna take all this? They already took this stuff out of my check. You're not paying attention to what's going on. Like I told you, that's how I ended up stroking that that 5-figure check, right? That's how I ended up stroking a 5-figure check. It's because I wasn't paying attention. But I rightfully owe that money. I'm not going to argue with y'all. I rightfully owe the number. Now, if it's something and they coming after you when you actually already did it and it's like, yo, you doing too much with these interest and penalties, that's a different story. But if you rightfully owe it and you can see it from looking at them 4 numbers on your tax return, them key numbers, you need to back up. And you need to figure out a remedy to get it together. And an installment agreement is one of those remedies. Okay? Now, if you've fallen on hard times and stuff like that, remember, there's other options. We do have an offer and compromise. We do have a CNC, currently not collectible. There's other options, but I really want to break this one down because in most cases, most taxpayers qualify for an installment agreement. Now, I won't tell you, I will also tell you this. Sometimes we go into an installment agreement to get us good to go, right? Because why? It's prohibited from levying and it suspends the time to collect, right? We messing with a clock over here. So timing is everything while we work on another strategy. So if you're working with somebody who's an enrolled agent, a CPA, or a tax attorney, and they like, look, this is, you make sure you understand what you're getting into. We might put you into an installment agreement so that we can work some other things out or get all the documentation we need as part of our strategy. But an installment agreement is not a bad thing. It is what you're doing to pay back your mortgage. It is what you're doing with your credit card, unless you're paying your credit card in full. It's what you're doing with your car note. Because you owe that and you're in the process of paying it back. So I want to destigmatize, oh, I don't want to be in a payment plan. Yeah, it's got interesting. But you're doing the same thing with your car. You're doing the same thing with your mortgage. You let me look at you. Let me stop and look at you. Anybody who's looking on the cameras. You're doing it already in aspects of your life. And I know you don't want to always be in a payment plan, but I don't want you to think that it's a bad thing. Because if you rightfully owe them people that money based off of looking at the tax return itself, unless the tax return was just totally wrong, you got to put your big girl drawers on. You got to put your big man grown drawers on and accept. Yo, we made a little bit more cheese than we thought. The beauty behind it is they ain't taking it all. Can I put that in perspective for a moment? Can we pause and think on that? Like, I'm working on my sounds and stuff like that over here on the Stream Deck. I don't have them all together, but can we take a moment and pause and just think about that? Just think about it. They're not taking it all. They're only taking a portion of it. And I know the truth of the matter is if you look at your W-2, they already took a portion of it anyway. You're not getting 100% of the money. You're not getting 100% of your salary. They took it all and they gave you the leftovers. And you've been living and making it work and going on vacation and buying Yeezys and whatever the heck you buying with the leftovers. So you doing it. You eating good in most cases. I'm not saying that's for everybody that's listen to my podcast. I know it's hard out here. I'm not gonna pretend, okay? But in most cases, whatever you're left over with, you're making decisions with that money. And you're spending that money however you chose to spend that money. If you get a W-2 paycheck, and if you get a side hustle and you decide you won't keep all that money, we got some issues. Because they want a portion of it. Because that's the way the game is played. The same thing when we doing passive income and real estate and stuff like, you know what I'm saying? All that pushing forward stuff and net operating losses, and that's for business owners. That's for real estate like I'm telling you. That's the offset in future. Like, you gotta switch and play the game a little bit different. Because they pay taxes different than we do. But they also lobbied for it. So I don't want to hear you say, oh, the man, oh, the man, oh, the man. Because there are remedies and an installment agreement. You already doing aspects of it in your life. Now, what happens is when that installment agreement number is just a flat rate number, and the IRS can be ignorant like that sometimes. And when a number come out to what the number is because you let this thing fester because nobody ever told you what the formula was and what the numbers were to pay attention to, and you let that thing grow to $30,000, $40,000, $50,000, because I've seen it. And then that bill, the monthly bill, end up being $700, $800. Yo, that's hard because you're trying to do everything else. You're trying to get your kids somewhere. You're trying to work your job. You got to put gas in your car. Groceries is high. Now, that's a different story. Then we negotiate what that installment agreement payment looks like. But we have to do it based off a financial statement. Meaning you're going to have to tell your business so that we can go and be like, this is what a full pay is. They say really the amount is $700. Can you afford $700? No, I can't afford $700. Okay, so let's go to the table. And then you work with a tax pro. You work with a EA. You work with a CPA. You work with a tax attorney so we can actually help you formulate, all right, let's get the number down to this. Something that's not going to break your back to the point where you feel like you can't breathe. The goal is not to go into financial hardship. I'm going to say that again. The goal is not to go into financial hardship, but you do have to pay your debts. We not out here in these streets not letting people off the hook because they just didn't follow the rules. That's not fair for us law-abiding, tax-abiding citizens that's paying all this stuff. I know we didn't come up with this deficit, and we not, you know what I'm saying? But the truth of the money is they using our tax dollars to pay everybody around the world. That's what it is. They got to get the money from the peoples. You need to know what the tax code say. You got to know how to play this game. Yes, we got a lot of things happening with currency and things changing and the dollar being weak. Like, I'm not going into all the economics with that. But if you don't know these rules, because these rules going to determine how stuff go. If you don't know what's happening here, I don't care who you are. Everybody got to at least fill this form out. And whatever the numbers are in them 4 areas, adjusted gross income, taxable income, tax liability, and payments, that's what determines who pay what. And y'all mad at these politicians and stuff like that because y'all know what their individual tax return look like. Pay attention to your individual tax return and know these numbers. The issue is they go and work with people to help make them numbers, them 4 numbers, work in their favor. Even if they were to owe, they're not trying to pay the whole bank. And if they do, and you will hear a lot of people, I've heard a lot of tax professionals say, hey, if I owe $100,000 to the IRS, do you know how much money, how much income somebody got to pay, have received throughout the year to pay, to have to stroke $100,000 check to the IRS? Because they're not taking it all. This is the reason why I got to get y'all to understand. They ain't taking it all. They only taking a portion. If somebody say, and I've heard people say this, yo, I'm trying to get to the type that I got to stroke the IRS $100,000 check. That's a goal. I've heard people in my field say this. I'm like, dang. And when I hear it, I say, do you know how much money you got to make for your tax liability to be $100,000? I've seen it in most cases. You somewhere around $400,000, $500,000, $600,000, somewhere within that range, $400,000 to $600,000. Do the math. If you had to pay $100,000 in taxes and you made $500,000, that means you kept $400 some $1,000. You living pretty, and that's for 1 year. They don't take all of it. I'm just trying to give you them numbers so you can understand. They're not taking it all. It only becomes sticky when you haven't realized and planned for it. And now this thing is building and building and building and building and gaining interest and traction and growing bigger than you want it to grow. That's when we have an issue. All right? I'm going to get off the soapbox. Y'all can tell this chick, she really wants y'all to get it and understand and absorb it and know how they moving and understand and enjoy this so that you can start thinking about things different. Okay, the tax cop said these are the numbers. The tax cop said this is the goal. The tax cop said I got options. You got options, baby. You have options. The tax cop not going to lie to you. You have options. And if it feels like you don't have options, find somebody to talk to that can look at your particular situation and see what options are available to you. There are always options. But I'm going to tell you the truth. Everybody don't qualify for offering compromise. I told you that last week. All right, let's get back to this payment plan so I can get off of this. Y'all, okay. Where were we? Similarly, if you default on your installment agreement payments, now I got some people, lo and behold, I ain't gonna tell you, I got some people who have done this. If you default on your installment agreement payments and the IRS proposes to terminate the installment agreement, the running of the collection period is suspended for 30 days. So what this means is I got time to get you back into the installment agreement. I got some people who are in this situation that I'm working with on the upcoming week where their installment agreement has defaulted. And I got to get them back in the installment agreement before August is over, so that it seems like we moving seamless, and they ain't miss a payment. I gotta get them back in it. because we got a finite amount of time. I'm able to do this because I am an enrolled agent. I do have power of attorney on these clients. I have already talked to them about the strategy we're gonna use. I'm gonna get on the phone. I'm gonna do the talking. They ain't gotta do all the talking at all. They just gotta fill certain forms out for me and make sure that we can move the way we need to move and tell me where the money gonna come from. And they gotta sign the forms. I can't do it for them. I can do the talking. I can do the negotiation. I can like give me 5 days so I can get the signed paper. I can give them paperwork so we can fill it out. They gotta sign it. They gotta give me the bank account. I can submit it on their behalf. All right. You want you a good you want you a good power of attorney that's working the strategy with you and explain it to you along the way. Last, if you exercise your right to appeal either an internal installment agreement rejection or termination, the running of the collection period is suspended by the time the appeal is pending to the date the appeal decision becomes final. We got a clock working. We'll talk about limitation. Remember the big number we talked 10 days, 10 years, right? We have clocks and time frames we're working on in the resolution side of the house. That's what this means. Hey, I want to put this on hold. I want to come up with different strategies. I got to buy me some time. I got to really figure out what's going on. I got to get some financial information. I got to be able to do some investigation and assess my client situation in full. This allows us to do it. This buys us at least 30 days. And we can kind of put stuff in limbo while we're working with the client to make it work in their favor. All right. We'll go over payment plan costs and fees and the way you can do it. All right. So here we go. If the IRS, remember the IRS don't got to approve your plan. If the IRS approves your payment plan, installment agreement, one of the following fees will be added to your tax bill. Yeah, you got some fees associated with this. It's like the finance charges and stuff like that when you go to buy a car. It's not no different. It's the closing costs and everything to do the business, like when you go get a mortgage. All right. Changes to user fees are effective for installment agreements entered into on or after April 10th, 2018. For individuals, balances over $25,000 must be paid by direct debit, meaning y'all better make sure your amount of money is in the account that you told them you want them to hit on the day that you told them you want them to hit it, or else you would default on the installment agreement. I'm going to say it again. In fact, you need to see my face for this. What this means is direct debit. If you told them to hit a certain bank account on a certain day of the week, you need to make sure that your payment for the installment agreement is sitting in that account. Otherwise, the installment agreement gonna default. And we're gonna have to go through the process again. Ask me how I know. If we get you down to a good amount and we've come up with a different strategy and it ain't breaking your pocket, I need you to know that this is a bill and it's an auto renewal each month. And just like Netflix and Hulu, because that's who I got on auto renewal, you need to make sure you got at least that amount of money in the account. Washington Gas. I forgot I even had a Washington Gas bill. My husband had to tell me something. We got something. He was like, so I don't have a Washington Gas bill. This really happened this week. And he was like, I said, darn it. I got that joint on auto pay. I make sure it's enough money in there. That's why they don't got to contact me. It's been being paid. I just get the email. I ain't pay attention to the email. That's on me. I'm not saying don't pay attention to the email. I am saying make sure you got enough money in the account that you told them on the day that you told them, or else it will default and you are working again with your tax pro to get you back into that installment agreement. Now, you got some tax pros that'll charge you again to get back into that installment agreement, and you got some of us who won't. If you got a bad habit and you continuously doing this, guess what? The tax cop gonna start charging you because then you're gonna pay attention. If it's something that just life got to happening, the first time, I'm gonna work with you. I'll be like, all right, cool, sign the paperwork, we're gonna do this. But if this is a bad habit, and I got clients on the different spectrums, trust me, I'm gonna be like, This is a service and a fee because now I got to get on the phone. I got to do this. I got to make sure you have your paperwork. I got to negotiate. Maybe the person I'm talking to from the IRS is nice. Maybe they're not so nice. I don't know. But I could be doing something else because I got you a good payment plan from the start. Now you acting crazy. And we came up to the terms you agreed to for the bank account you agreed to on the day you agreed to. Be mindful that this is work for us and our teams. And we are working with you and coming up with the strategies to help you so we can reduce those liabilities, get you on the straight and narrow, get you some refunds that'll help knock that thing down faster so that you can be like, my tax liability is this, my payments are this, they within $1,000. I'll tell y'all, for me, break even, my clients hear this, break even for me is $1,000 or less. So around that $1,000 mark, either you owe $1,000 because you can get your hands on $1,000 quick, or you got to pay $1,000. No, I said the same thing. Either you owe $1,000 or you get a refund back of $1,000. Let me get straight. I'm a human, y'all. 1,000. Either you get a refund or you gotta owe it. $1,000. That means you let them borrow 1,000. You get a refund. You let them borrow $1,000 for the year. Ain't nobody mad at that because it's interest free. Or you give them a refund. You gotta pay them $1,000, and you can find a way to get $1,000 quick. All right, most of us, if you do an emergency fund, you got that. So you can pay it and then build that joint right back up. All right. For businesses balances over $10,000 must be paid by direct debit. And normally when they talk in businesses, in most cases, they're talking S corporation partnerships and C corporations. Not necessarily Schedule C, but if Schedule C is your primary income, but I will tell you in all honesty, because normally that rolls into your individual return. So when they talk in businesses, in most cases, businesses, we're talking partnerships, corporations, C and S. Okay? Let's look through these payment plans real quick. If you do pay now, you pay it in full. You got an option of paying either through direct pay or EFTPS. EFTPS is supposed to be going away. It's supposed to be creating a whole nother system. I like EFTPS, especially for my business owners, because it gives us a history of the payments for the last 18 months. So when I can check it, we can go back and check it and make sure it's good. So I like EFTPS. All right, because it gives me the history. And if the client forgets, I'd be like, run me your EFTPS report. Let me see it for the last 18 months. And then I can figure out what stuff goes, especially if I got to do tax return, if I got to bring them up to speed on past year taxes. Okay. When you apply online, it's $0. Apply by phone, it's $0. You pay them in full. All right. So direct pay, which I absolutely love. The 2 times I had to pay, I paid via direct pay. But I do love, for my business owners, I'm not going to lie to you, I love EFTPS. And I could have paid via EFTPS as well. Or by check, money order, or debit or credit card. So now, there's fees that apply when you pay by card, but I ain't going to tell you nothing. I'm going to tell you this. For my business owners, for those individuals who are out here like, yo, if you pay the IRS with a credit card and you have a card that gets points, you getting a twofer. So you actually getting a win. You can get some points if you got to pay them people. Okay? Something to think about. Just something and that works for estimated tax payments too. If you're using your credit card, yes, it's a fee, but also know you could be getting some points for that payment. Like, make the money get you something else in return. All right? Short-term payment plan. Pay amount owed in 180 days or less. We're talking about 6 months or less, right? Only individual taxpayers can apply for a short-term payment plan. You got to apply. You got to get permission. Once you do it, for my clients that can pay in, let's say it's $2,000 or less, $1,000 or less, I'm here for y'all doing a short-term payment plan. Why? Because there's no setup fee. And if you apply by phone, mail, or in person, it's no setup fee. Yeah, you got interest and penalties, but we ain't got to charge. We ain't gonna pay no fee to go into this payment plan. So if we can do whatever we can and get it down to 6 months or less, let's make it work, baby. Let's find a way to make it work. Or if we can put it on a credit card, we can get some points, and then you pay the credit card. Figure out what your interest is though, because I don't want you floating it. I don't want you floating on a credit card. If you know what I'm saying, that's that. Even with the points, that ain't necessarily it. All right. Options. Long-term payment plan. You gotta be approved for this. Pay amount owed in monthly payments. Pay through direct pay, right? It's a $31 setup fee if you can do it online. Now I'm not gonna lie to you. A lot of times it don't work online. So a lot of people come to a tax pro to get it done, or someone who does resolution to get it done. Because sometimes it don't work. I can count on my hand how many times it actually worked going online. Apply by phone, mail, or in person. It's a $107 fee. Why? When you can do a $31 fee, but it don't be working. Low income people apply online by phone or in person. The setup fee is waived, and there's amounts for low income. Plus, accrued interest and penalties are not going away, people. They're not going away till it's paid in full. The only way we saw it, the only way you don't have no interest and penalties, no continual interest and penalties, is if you pay the amount in full. All right? Or after applying for a long-term payment plan, this is a lot of times when I go through the process and I'm setting it up as the POA, we had either direct pay, right? Where they hit in your checking or savings account, which means make sure that money is sitting in the account on the day that y'all tell them to debit it, right? Or make a monthly payment via EFTPS. Or you making a monthly payment yourself by check or money order. If you apply online for this, $130. I can tell you in most cases, online, like I said, sometimes it be working, most times I have found it does not work. Apply by phone, mail, or in person. It's a $225 setup fee. I don't like the fee if we don't have to, but hey, low income, they got a $43 setup fee. But we got interest and penalties up there, okay? And then we got, let's close that out. Change an existing payment plan. All right, so let's say you got a payment plan that's already in place, but we got to do some things. We got to switch the account. We got to do some stuff, right? You can pay through direct debit. When it hit your account, make monthly payment directly from checking or savings account. You making the payments via direct pay, EFTPS, money order, credit card, and some fees that are associated with it. If we apply to revise online, it's a $10 fee. If we doing it over the phone or in person, it's an $89 fee. Low income, $10 fee. Online, $43 if a person talking to them. $0 fee for changes made to existing direct debit installment agreements. So if we just switching accounts, because you're already on a direct debit, which I have some clients that I got to go do this. Hey, let's switch the account. Let's figure out what the account is. Let's figure out the day. Then we ain't got no fee. All right. I'm not going to go any deeper. How do I set up? Why do I have to set up a payment? Why is there a setup fee? Am I eligible for a waiver or reimbursement? How do I determine if I qualify for low income? How do I check my balance? If y'all don't have an IRS online account, that's rule number 1 for me. Go get you an irs.gov account, get you access to your online account, and see what is happening. Now, it's not updated in real time like your bank, so that could be a problem. But I do want you to have access to your account. How are you eligible? Now, this is what I do want to hit this real quick, okay? If you are an individual, you may qualify to apply online if, for long term, you owe $50,000 or less. That includes penalties and interest. And filed all required returns. Current year, y'all gotta see me. Current year and 6 years back. We got to get you in compliance. That's the only way you can even get into these payment plans. Current year, so 2022 and 6 years back. Okay? Short-term payment plan, if you owe less than $100,000 in combined tax, penalties, and interest, then you can do it online. But I'm not going to lie to you and tell you that online work. I told you. Most of the time I find people, they can't do it online. They end up having to talk to somebody on the phone because online for whatever reason, and even in their account, that's the whole purpose, part of the reason why they're supposed to be having your own accounts. That portion, sometimes it just don't work. I do not know. The IRS, I'm sure, is working on that. They're working on a lot of things for infrastructure. And with the technology, but I can tell you that one, in most cases, that's where I get a lot of clients coming to me to help them. Patrice, can you just call them? Because I don't want to be sitting on the phone for hours. Because I try to do it online, it don't work. I'd be like, okay, let's make this happen, and they compensate me accordingly to make sure that we get them in the payment plan. All right, y'all, we've gone over quite a bit. I'm going to actually put this link so you can get the rest of the stuff in it. I will put it in the description. I will put it the um in the description box. I will put it in the notes for the podcast. If you want to go directly to this link to read the rest of the stuff that's there, how do I review my payment plan? What browser should I use? What can I change with my payment plan? How do I revise my payment plan? Like, it's just so much information on here. I'll give you the direct link so you can go and peruse the page yourself. I'm not going to keep talking. I didn't talk for an hour because I went in and broke some stuff down. I hope that if you got nothing more, you know that you got options. And offering compromise is not always the best option, nor do I want you to have your feelings hurt. I do want you to walk away with them 4 numbers that you need to pay attention on that 1040. The queen, adjusted gross income. The king, taxable income. Your tax liability, what you owe them people, compared to the 4th number, your payments, what you pay throughout the year. All right. If you don't remember nothing else, like, write that down as a note. And I'm gonna get to a point. Maybe I get somebody to edit it down the road and be like 1, 2, 3, 4. We probably will do it in a reel, because those are the numbers you have to pay attention to on the tax return. Because then when you get that and you see a number in box 34 or 37, you know what's happening. 34, we get a refund. Hey, money coming to us. That means they borrowed our money interest free. 37, and this is off the 2022 return. 37, we owe them some money. Because when we did the comparison, that tax liability number was higher than the payment amount. And so therefore, if I can't pay it in full, like we talked about, these people want their money, what do? Payment plan is the first option. And 9 times out of 10 is the biggest. It's a strategy, is where we start. It's where we're analyzing first to get us some time, to stop the clock ticking, to, like, let's get us in good graces. Let's get us somewhere where we can work some stuff out. And then from there, determine what is available to us while somebody is actually going through the full-fledged investigation to get you in a good spot to figure out, is there another remedy that's going to work? We ain't trying to put you in financial hardship. But no, y'all gonna have to come up off the information. You're gonna have to do a financial statement to justify it. If they doing a straight line and be like, this is what you owe, now we're gonna have to dig deep, and we're gonna have to work together to make it so that it's presentable for you all. All right. Know that the tax cop is here to help and answer any questions. If you got any other topics you want to hear, please put them down either on YouTube. Like, hey, like, if this was a good podcast, you thought this was helpful, if we're giving you the content that you like, let us know. If there's anything else you got questions about, let us know. Please let us know. And for those who are listening on either platform, YouTube, who are actually listening, Lipson, Apple, Google, Pocket, wherever you're hearing us, what's the other one beginning with S? Spotify. Subscribe and give me some feedback and let me know what you like and let me know what you don't like. Let me know what you want to hear more about. Let me know what your true questions are so that we can demystify this thing, so that we can break this joint down. If there's somebody that you would like me to bring on to talk about it a little bit more, just because, hey, it's not just about me talking about tax. It's me talking to business owners and having a conversation with business owners. I want to empower business owners and individuals who are thinking about being in business with these tax solid tips to know how to move. But I also want you to hear entrepreneur stories so you can understand we are more alike than we are different. Thank you for tuning in to another episode of Talks with the Tax Cop. Until next week, peace.